The first major exchange, compute futures. The Singularity has had a price since March, but no major exchange to trade it on, until now. 2 months ago, I wrote about the moment compute became a tradable asset class. Orn, a company I advise and helped form with backing from 021T Capital, began publishing the Orn Compute Price Index, OCPI, on the Bloomberg terminal, the first compute benchmark that derivatives can reference and settle against. OCPI settles against cleared GPU prices, not rate cards or surveys. That was the credentialing step. Bloomberg distribution is how a commodity announces to institutional capital that it is ready. But credentialing is not clearing. To finish the arc, oil walked in the 1980s and natural gas in the 1990s. Compute had to find a home at a major regulated derivatives exchange. Today, it does. Orn plans to launch exchange-listed futures on GPU compute through Intercontinental Exchange, ICE, parent of the New York Stock Exchange and operator of one of the world's leading networks of regulated exchanges and clearinghouses. The contracts will be US dollar denominated and cash settled, and will reference the OCPI series covering H100, H200, B200, RTX 5090, and additional GPU types. They will launch pending regulatory approval. ICE was founded by Jeff Sprecher in 2000, 3 years after his 1997 acquisition of Continental Power Exchange, a struggling Atlanta trading platform, for $1,000 from Mid-American Energy, later acquired by Warren Buffett's Berkshire Hathaway. The vision was to drag opaque OTC energy markets into transparent, electronically cleared trading. The parallel to GPU compute today is exact. ICE acquired London's International Petroleum Exchange in 2001, inheriting the Brent crude futures contract IPE had launched in June 1988, and grew Brent into the price reference for roughly 3/4 of the world's traded oil. ICE went public on the New York Stock Exchange in 2005, acquired the New York Board of Trade in 2007, built ICE Clear Europe in 2008, the first new major UK clearinghouse in over a century, and then acquired the NYSE itself in 2013. The same plumbing that runs Brent crude, TTF natural gas, EU carbon allowances, and the world's benchmark sugar, coffee, and cotton contracts, the last of which has traded continuously in New York since 1870, is now being extended to compute. Once OCPI-referenced futures clear at ICE, lenders financing GPU build-outs can hedge their exposure on the same infrastructure that clears oil and gas. Insurers can underwrite residual value risk against a regulated curve. Hyperscaler treasury desks can lock in forward compute costs the way airlines have locked in jet fuel since the 1980s. Sovereign infrastructure funds and pension capital, pools that cannot touch unregulated venues at meaningful size, can finally participate in the $7 trillion compute build-out with the same risk machinery they use everywhere else. The index was the foundation. The exchange is the keystone. The arch can now bear weight. As Peter Diamandis and I argued in Solve Everything, the intelligence revolution turns every scarce domain it touches into an abundant one, but only after the financial infrastructure catches up. Edison built the generators, Samuel Insull made them financeable through Commonwealth Edison and the Modern Utility Holding Company. Carnegie made the steel, J.P. Morgan made it bankable through the 1901 merger that formed U.S. Steel, the world's first billion-dollar corporation. Drillers found the shale. Futures curves let the capital follow. Every commodity that powered a phase of civilization eventually traded next to the others on the same plumbing. Oil took over a century, from Drake's Well in Titusville in 1859 to WTI futures on NYMEX in 1983. Gas took even longer, from America's first gasworks in Baltimore in 1816 to Henry Hub futures in 1990. Compute took only years because oil and gas had already built the machinery. Those years end now. The Singularity used to be an asset you could own only through equities, the way investors got oil exposure for the 7 decades between the 1911 Standard Oil breakup and the launch of crude futures. That era ends when the commodity gets its own exchange-listed contract. For compute, that day is today. Those interested in ORN's compute pricing and financial products can learn more at orn.com. This post is for informational purposes only and does not constitute investment, financial, or trading advice. Nothing herein is a recommendation to buy, sell, or enter into any transaction involving GPU compute, derivatives, or any other financial instrument. Statements about future capabilities and product listings are forward-looking, subject to regulatory approval, and subject to uncertainty. I have a financial interest in ORN.